2016 has been a busy year for the real estate market, especially in the wake of rising interest rates. But what should we expect for 2017, especially in commercial real estate? Join us now is Jason Meister, Ackman-Ziff Real Estate Director. Good to have you here, sir. I think this is the question everybody's wondering. So let's start first with residential.
Sure.
Because everybody wants to know if their house is going to be worth more in the new year, and if they're looking to buy a home, if they should buy it now because prices are going to go up. What's the direction?
So I think you've seen interest rates move significantly since the election. So I think that in the short term, there's going to be a rush to lock in some loans. So I think you're going to see some activity in the near term. I think the housing market in the major cities like New York, San Francisco, Miami, we've seen an overdevelopment of supply because for 8 years, money has been free. Interest rates have been near zero. So we had an overdevelopment. Everyone became a developer. So we have a lot of supply online, and I think that supply and demand prices are going to come down.
Okay, but that's going to take some time to work through that supply.
That will take some time.
So are you saying people have 6 months before we really see, give me a time frame.
Yeah, I think 6 to 9 months we're going to start to see that capitulation in the marketplace.
All right, and then let's talk commercial real estate, and we'll talk residential more later, but get to commercial real estate, and what do you expect there? Yeah,
I think, look, for the last 8 years, you had a community organizer in the White House. We now have a real estate developer. He's a pragmatic guy. We also have the House and the Senate. So I think that a lot of the proposals that he's been talking about are going to get pushed through. He's been talking about Dodd-Frank and reforming it. He's been talking about bringing the capital gains rate down. I think he's going to cut the corporate tax rate. So I think he's a pro-growth, pro-business president, which I think bodes very well for commercial real estate.
And everybody wonders, if we start to see those interest rates move up, there's going to be a rush to do something. What do you anticipate in 2017?
Well, one of the key questions is what's going to happen to regulation in terms of bank lending. Getting a mortgage is not an easy thing these days, going through all that rigmarole. And if they liberate interest rates, people think that's going to kill things. I think it's going to stimulate things. You're going to get a lot of new businesses, a lot of job creation, and you're going to get a more normal market. Because even on the housing market, even though there's been some activity, if you look at our historic norms, the last 8 years have been pretty punk.
Right. I mean, look, it all comes back to jobs. People buy homes with their jobs, and businesses grow in commercial real estate with jobs, and good paying jobs. And our labor participation rate is the lowest level in 40 years. Our GDP is sub 3% for the last 10 years, the worst stretch since the end of World War II. So I think we're going to have growth. I think it's going to take a while to get through the damage that's been done. But I think we're going to be I'm very bullish on the commercial and residential.
Isn't a lot of that city building, certainly in New York, foreigners coming in rather than a normal domestic market?
Yeah, so there's been a lot of overseas buyers. And I think especially the Chinese in New York and Miami, I think you're going to see a lot of cutback from that. I've already started to see that. China's been cranking down on the outflows of capital going out of China. So I think you can see less of that in 2017.
That's great, though, if you're priced out of a one-bedroom apartment in New York City. And certainly with Miami, there's been great weakness in the South American buyer. And then you've seen, with the euro weakening so much, you've seen a pullback in European buyers in Miami as well. I mean, that market looks poised to be a real buyer's market.
I couldn't agree more. I think Miami, I read 70% of the buyers were overseas buyers over the last year or so. I think that the fact that they're going to be pulling back is a real big opportunity for Americans, and I think that we should be bullish on those markets going forward as a buyer.
Obviously, this has been a huge political talking point on the part of President-elect Donald Trump. He touted that he would be the best guy for jobs and that he would make everybody make more money, do better, buy houses. So this is definitely a Trump effect, too, that we've been seeing.
I think absolutely, and I think we're seeing the optimism come back in Americans. We're seeing that people are really hopeful that the country is going to be great again. We're going to see, if we're seeing more people buying, more Americans buying up in Miami, we're seeing more enthusiasm in the markets. I think that this is a really exciting time.
I couldn't agree more. I think that, as he said, he's going to be the best jobs president God ever created. So hopefully.
Okay, all right. So I have to temper you a little bit. I mean, you sound really optimistic. Where are you concerned? Like, what could happen that could throw off your very optimistic outlook for the year?
I think that, again, the fact that money's been free, we've been effectively on life support, right? And as we start to pull that plug, we're going to start to see certain internals failing. So I think we need to be vigilant. We need to be careful of where those interest rates go and how fast they creep up. But I think that in the long run, I'm very bullish.
Well, and when markets turn into buying opportunities, it means that they're poised to weaken. So, because again, a lot of these markets, there's very little inventory, and prices have gotten so out of whack with what people earn for a living, particularly in like San Francisco, where there's been a decent job market in the last 8 years, places like San Francisco and Silicon Valley.
Right. One other point I'm going to make is that in the residential market, the millennials haven't really been buying homes over the last couple of years. I think you're going to start seeing them dip their toe in the water on the housing market front. I think that with the jobs that we're going to hopefully be delivering, I think they're going to start to come into the residential market.
I interviewed Sam Zell earlier this year, and he said the millennials, they don't want the starter homes, and they don't want homes that they have to work on. They want turnkey perfection, and they will wait it out until they can afford the more expensive house.
That's when you buy a condo, by the way.
Yeah. Right.
All right. All right. Thank you very much.
Thanks for having me.
Jason, good to have you here this morning. Ho, ho, ho. Merry Christmas.
Merry Christmas.
Happy New Year. All right.